welcome. My name is Thomas, and I'm heading up sales in Columbus. And today we are gonna be spending half an hour, an exciting half an hour, with Treasury, presented by Frederick from AMC Banking. We will ensure that any questions can just be raised in the Q&A in the bottom here. Just please type in what questions you have. You can choose to be anonymous, and we will answer questions at the end of the presentation. We will also be recording the session, which means that you will afterwards have an access to a link where you can share it with your colleagues or anyone else that finds this interesting. And having a presentation.
Thank you very much, Thomas. Hi, everyone. My name is Frederick Larsen. I work at AMC Banking. My role in AMC entails usually onboarding new customers and designing these technical solutions for our customers, and specifically when it's maybe some larger and more complex requirements. I also work or am very involved in the design of our products. I help guide and decide with our developers on the new features that we implement in banking. And that, of course, includes what I want to show you today. So first of all, I want to say, of course, thank you to you, Thomas. Thanks to Columbus for helping us facilitate this to show these new features, because it is something that we're really, really proud of. We've made some new treasury functions that you can utilize in the AMC banking. Of course, we want to spread the word. Before we get started on the demonstration, I'd really like to share a little bit with you about, well, some steps that we've taken. So quickly, for anyone who doesn't know us, AMC Banking, we're an ISV in the Microsoft space. We deliver these cash management solutions for operations and for Business Central, and of course for all the old AX versions going back quite far. That means for 30 years or so, we've been on the sideline of Microsoft. We've been developing to make this easy and more automatic. If you know AMC Banking, you know our core deliveries have always been things like bank integrations. It's been automating customer payments. It's been maybe automating these payment runs. So basically, historically, AMC Banking has been deeply rooted in this world of finance, right? We talk about accounts payables and accounts receivables. But yeah, as mentioned recently, we've taken our first few steps into the treasury world. And let me just share this one here. Good. So our mission is actually really simple. We want to provide you with these approachable treasury tools while still staying true to these financial origins that we come from. So basically, we want to deliver this lightweight, user-friendly package, even though the functions that are utilized here is actually fairly advanced. And we actually have quite a unique position to do that, in the fact that we work inside of finance and operations, so we can leverage this financial data that you have in your ERP system, and we can leverage the bank's data since we work with these bank integrations. So that means we don't need to move all this data into a separate system. We don't need to change any bank agreements that you have. Everything that you need will happen inside of finance and operations, inside of the AMC banking module. It is, as it says, native in Dynamics. So Treasury in general it's quite a loaded word, right? It has more than one definition, especially in people's mind. So to boil it down, there are four main features that we have introduced and brought into this AMC banking module, what I'd like to show you today. The first is an insights workspace. So basically a new workspace where you can see insights into your financial data. We can show things like currency holdings between banks, balances across the different companies, and some nice graphs and things that shows you, for example, the forecasting or other types of insights. So you can think of this as kind of a cockpit for these financial decisions that you have. The next is some liquidity forecasting or tools to forecast the bank balance. And this is, of course, what it's all about. We want to try to project the bank balance in the next given time and give you an overview to basically see if you have the liquidity to meet your financial obligation. As it says here, can you pay the bills of your suppliers? Can you pay the salaries of your employees? And yeah, show you an update of a forecast, whether you have enough liquidity to do this. The forecast shows you a 30-day projection of these bank balances. It enables you to add manual transactions, and you can dive into the numbers on a very granular level. The third function is cash sweeping. So basically, this is automated rules for internal bank transfers. That means if you have excess cash on one account and a deficit on another, well, with the click of a button, you can move money around or you can pool them centrally. So basically, you can say that the forecasting that we have, it gives you some knowledge about the future, a forecast about the future, but it's the cash sweeping that enables you to take action on this knowledge. And the last function that we have introduced is our cash pool functionality. So basically, it's the ability to create and maintain virtual bank accounts, meaning you can allocate funds or loans, all while keeping complete control of these virtual bank accounts, subledgers, even though only a single bank account is used. Okay, so these are the four main features. They're all out and available. And I mean, of course, we want you to start using them. So let's jump into finance and operations. I will give you a short introduction to each, but of course, notice we have quite limited time. So it'll be a fairly quick walkthrough of each of the functions. But it's important that you know, I mean, both us at AMC and Columbus and the consultants there are very open to doing more in-depth sessions together with you and hearing more about your requirements and show all of the features more in depth. Good. So what I have here in front of me is a standard finance and operations. It's using AMC banking, of course. Within this AMC banking, I have a direct connection to my bank. That means, for example, every day, my bank statements flow into the system with an opening balance and a closing balance, and I could pay internal transfers or my vendors if I wanted, without having to download and upload anything. So the very first thing that I want to show you is, of course, the workspace for these AMC banking insights. Now, this is meant to give you a quick overview of your liquidity, basically. So if I just change this to show me all companies, we see, okay, so I can see the balance across all my different companies and all my different banks, both in their own currency or in my reporting balance. I can see a currency distribution, what's my currency holding over time, and I can see my cash position. What do I hold of each different currency? Whoops. Now, this one especially is actually really, really nice. I like it a lot because you can dive into the numbers a little bit more, and you can say, all right, well, so I hold these currencies across my different companies, but what about in my different banks? Okay, I can change to this and see, well, where do I have the available currency that I might need? The Insights workspace here also shows you our forecast, meaning it shows kind of a quick picture of our forecast for the current month. So that means we have a line up at the top showing the forecasted bank balance. And as my statements flow in day by day, right, then we have these bars down in the bottom showing, well, what was the actual bank balance of these dates. Now, I realize I'm using some demo data, doesn't fit perfectly, but it's more to show the functions behind it. We also show some statistics into the payment details that you have, like payment type usage and punctuality. But when it comes to this forecast, of course, we can dive a lot more into the numbers by going to the dedicated cash flow forecast space. So if I open this one here, I see a forecast of all my different bank accounts actually. And of course, once again, this is a lot of numbers. I realize I can dive into a single bank account and see, well, what comprises of this forecasted bank balance. So if I open this one here, I'm shown a more granular level. I can see, all right, well, we have some dates going out into the future. And we can see, all right, well, the system believes that there will be some payments going out on this and this date, and some payments coming in on other dates. So the two, the accounts payable and accounts receivables are the ones that are there the first time you open it, and then you can create these extra manual transactions in the forecast setup to have a more precise view of your forecast. So the summarized numbers that we have here gets shown as totals down in the bottom section here. So that means I have my forecasted inflow day by day, money going into this account, and forecasted outflow as well. This all ends up in an forecasted bank balance going forward. And of course, once I receive these actual bank statements, then the actual bank balance on this date gets filled. And of course, my goal here would be to minimize the difference between the two. What we want is to be able to trust our forecasted bank balance to as much details or as precise as we possibly can. So we can actually use it in some of our other functions. So if there is a difference, we offer the ability to dive more into each of the different sections. So for example, if I see that maybe that, well, we miscalculated how much there was in the accounts payable, I can again dive further into the details, see which open invoices actually comprised of this forecasted amount, and try to find out, well, where did it go wrong, if there was anything in the any difference between the forecasted bank balance and the actual one. So this tool here has evolved to become really nice, I would say, and very, very useful. Yeah, as mentioned before, I mean, the forecast here, it shows you the knowledge or the foresight into the future, but the actual actions that you can take comes in the sweep pools in here. If we move over to the sweep pools, they basically works by creating a sweep pool rule. So what I do is I define a master bank account. That's my operations account here. I define, well, is there a minimum and maximum balance that should be on this account before the sweeps should happen? And then I start adding sweep pool members. So basically, sweep pool is automatic internal transfers. So I set up some members or other bank accounts in my finance and operations, and I define some rules for it. So the sweeps can be either one way or two way. If I have it one way, that would mean that my automated rules is just used to move excess cash on my bank accounts up to the master account. So basically, what I need to define is a maximum balance that I should have available on these bank accounts. And whenever there's any excess of this, all right, well, the automatic sweeping would move the money up to my main account. If I have a two-way, then I also need to define a minimum, because then we can also use the main or the master bank account to cover any deficits that there might be on any of my bank accounts. So if we look at this scenario here, I've set some minimum and maximum for the different bank accounts. And as we can see, right, well, what will happen here is this one has a balance that is more than our maximum. So that would move money up to my master bank account, whereas these ones have a deficit. They have less than the minimum. So here the master account will cover the difference between their balance and their minimum. Great. These rules are incredibly simple to set up. There's really nothing difficult about it. It's super easy to define. Well, how should this move around? And all I would need to do if I actually want to create these payments and sweep the transactions would be to generate a sweeping proposal, meaning tell the system, all right, well, based on the rules that I have and the current balances, well, which transactions should take place in order to get up to the limit that I've defined. So pressing create a sweeping proposal means that we say, all right, well, we believe these transactions should happen. And of course, there could be many more if you have many more members of your pools. So basically we're saying, all right, well, it looks like we need to pay out these 4,800 to, that is excess on one of my bank accounts. And we need to pay out these amounts here to cover a deficit on one of the members. And we can see down in the bottom, the adjusted forecast for each of these accounts. Once the payments have gone through here on the 30th of September, all right, well, the day after, they will have the balance that I have defined exactly as I said it. So that also means I can see in my forecast picture down here, all right, well, I can actually see we need some cash in a few days, so I can also change the amounts if needed, and yeah, add extra or whatever is required. So really, it's as simple as that. Pressing create payments will create my payment journal for me, moving the internal transactions exactly as I wanted it. I just need to validate and approve it, and it's sent to the bank to be executed. Nothing else is required. And of course, for the users who are used to using AMC banking today, you know that these, when they come back again on the bank statement, they get posted automatically and matched, and everything that is required. Okay, so that was our sweep pools. Our last function is actually the cash pools. Now, this is a little different than the other three. Basically, it enables me to create virtual bank accounts connected to an actual one. So again, I've defined my master account or my actual bank account as being my operations account here. And I can create as many cash pool accounts based on that. So if I've created one, but if I create extra ones, these are actual bank accounts that are created in the system in finance and operations. But in reality, whenever they are used, well, they use the master account that is up here. But the software can keep full control of the individual balances of the cash pool accounts, whether you've made a loan to them or allocated some cash. There's full control of the available balance, even though all the actual cash is all standing on the physical bank account of the master one here. So if I use this bank account here to pay out my vendors, for example, okay, my balance would decrease and we would register that. And maybe more importantly, even if a customer pays to this bank account, but we register that this payment that they're making actually belongs to the US company, right? Well, we can add that amount to the balance as well. So I can, of course, create these cash pool accounts. I can allocate money to them, and I can issue loans complete with interest rates of whatever kinds I can define. They can be based on amounts, or they can be based on dates, or both. And also I can use this to here basically calculate interest based on whether there's an overdraft, if they use more than their allocated amount, or if there's a surplus, if they receive money that is standing here. I really think this feature here has just immense potential for value. I mean, we can really go ahead and eliminate bank accounts, physical bank accounts all over the world, and have much more tight control of these different processes. I mean, in reality, just by doing this, my US company have available for them to use a Euro bank account that they can both use to pay out to their European suppliers, but they can also tell their European customers to pay to that bank account. And that is without needing to open a new bank account in Europe and building a bank integration and all this, because they simply borrow it from this company here. Okay, I realize some of the things here went a little fast. That was in the interest of time, of course, but that does cover the main features that I wanted to show you today. All of it's available in the newest version of AMC Banking, and I really mean it when I say, I mean, I think if you're interested in any of this, you're always free to reach out to me, reach out to Columbus, and we'd be happy to take a more in-depth meeting with you.
Really cool. Good stuff here. I think it's fair to say that it's obvious that this both comes with some good overview, risk mitigation, and simply just a better view of the whole financial setup within a company. So really excited to see the possibilities here. And did you mention something about what release this would be available in?
Well, I mean, we of course add and improve on every release. So we've been slowly releasing these over 2025 basically. But we always recommend for everything that you saw today, the newest version, and there's a new one coming out today or tomorrow. So that would be the one to go with.
Perfect. We have a couple of questions here as we still have time for here. So there's a question here. Can the sweeping handle different currencies?
That's an interesting question. I mean,
maybe a good question.
yeah, different currencies for sweeping. So in theory, it would work, but I'm not completely sure that you would actually want to. When it comes specifically to currency exchange rates or currency exchange, I would imagine that one would need to have a little bit better control, right? There's more factors when it comes to currency exchanges, like the exchange rate or any special agreement that you have with the bank. So It is possible, but I would probably want to keep my sweeping personally to be the same currencies, kind of to decrease these these factors.
Cool. We have another question here. Does the forecasting feature take into account if customers usually pay too late? Some customers do. Yeah.
Yes. Yes, that is actually something that's been introduced in the newer versions. So in my cash flow forecast here, basically we try to determine kind of a customer score or maybe an expected delay. So if we recognize that your customers usually pay 1 day or 2 days too late, this will actually be reflected in the forecast. So all of your customers are behind the scene, kind of rated in how well they are at paying on time. And you might see a delay on some of them, which is this exact score here that's been reflected. So that, so we take history into account when trying to determine when your customer will actually likely pay their invoices.
That's a good question, a good answer to that important stuff. What about everyone is obviously in these days speaking about AI and how AI can help any company today. Is this based on some kind of AI tools behind it, or how do you guys work with AI in that sense?
Yeah, the AI. That's also yes, a loaded word.
Yeah.
Generally, I mean, as it is right now, sure, it's algorithms working behind the scene for things like customer scores and so forth, but not exactly AI. What we have talked about and want to include is a better way to actually project some of these standard transactions ourselves, and that would require at least some machine learning to be included behind the scenes. So what we hope to be able to configure is something like, well, all you really need to do is pinpoint the ledger account where you would post your bank fees, for example. And some machine learning would start to say, all right, well, let's try to determine when these would happen in the future and use these in our forecasts. But that's for a next iteration, I think.
All right. Excellent. Cool. All right. Time runs fast, and we are just coming to the half-hour mark here. So just wrapping up, thank you for everyone attending here. Like it was mentioned in the beginning here, we will make a link available for all you guys to share. And like Frederik said, if there is anything here that someone would want to dive deeper into, please reach out, and we will be obviously more than willing to take discussions in a deeper level based on your specific business. So thank you, Frederik, for taking us through here. Really good stuff, and thank you everyone for attending. And yeah, have a nice day.